to Invest Insights. I'm Abby Maloney. I'm joined today by Albert Fox, the Managing Director for Fox, Penberthy Dehn at Morgan Stanley. Al, thank you for being here today.
Abby, good morning. Thank you for having me. Such a pleasure.
Record levels of capital in the economy have resulted in greater saturation of markets and asset classes. At the same time, the past few years have shown great global uncertainty with events such as the pandemic and the Ukrainian-Russian war. What investment solutions should investors be looking towards in an effort to maintain long-term stable returns?
So Abby, thank you for that, because that question has a lot of directions you can go. And so let me step back and say first, yeah, it's true. There's a lot of capital in the economy and in the markets. And some of it, and a large majority of it today, is in fact driven by the Federal Reserve.
Right.
And historically, when too much capital is in the markets, chasing too few assets, you have expansion in multiples or prices of those assets. And this applies to all assets, right? It applies to stocks and bonds and currency and real estate and private equity investments or businesses that are looking to be acquired or acquire. And the longer the cycle persists, the more difficult it is to put a true valuation on things. And it really affects everything. And so over long periods of time, Abby, all events, whether it be the pandemic or the global uncertainty or the Fed adjusting interest rates, you can go back over history for a long period of time. And what you'll find is every year there's some kind of market or world event that influences markets. And markets are constantly trying to figure out what's quantifiable, what does this mean, and how do I price an asset accordingly? And so therefore, it's super critically important from our seat at the table to understand what you own, understand what its intrinsic value is and what you should pay for it, and make sure you understand how it's going to behave in different cycles of a market. And that's how you sustain a stable rate of return over a given period of time.
The topic of ESGs has become increasingly prevalent throughout society, with newer generations leading the charge. What are some creative avenues investors are exploring to be socially responsible without sacrificing returns?
So we love this topic also, but this topic has a lot to do also with capital, right? To start, who doesn't want a cleaner, healthier, greener planet? I think everybody does, and everybody you would talk to would say, yeah, we want that. So the challenge, right, is to innovate everything, right, from food and energy and automobiles and manufacturing, global logistics, transportation systems. And what it shows you when you look at that, it shows you, wow, we have a really small world.
Right.
But then it shows you how fractured that really small world actually is when you try to get this together. So then you have shareholders, right? And shareholders are thinking about cost containment and proper allocation of capital and achievement of all things very sustainable, clean, and green. And those are words that are easy to say, but really, really hard to deliver on. Some companies are going to become massively successful in the pursuit of it, revolutionize the way business is conducted, and others are going to fail. So again, it's going to be interesting to see how this plays out. There is not one trick pony that's going to figure it out. It's going to be evolution over time. And remember, there's never any new eras. Excesses run further than people think, and they're never permanent. So you have to pay attention to what you own, what you pay for it, and how does it fit in a bigger portfolio or a bigger investment scheme so that you're not betting the farm, so to speak, on one thing or another happening, because a lot of things influence it.
Correct. Round out our discussion on creativity. What role does creativity play in remaining competitive in today's landscape?
So thanks, Abby. That's again, a very broad question. I'll answer it if you'll allow me as it pertains to just wealth management and providing advice and guidance and counsel just to clients. We have found that with the pandemic, no good crisis, so to speak, goes unopportunistically taken advantage of, right? So we now have Microsoft Teams or Zoom and conference calls and have it your way. How do you want your work to be conducted? So there's been a greater level of creativity that I think that comes along with this. And I think it's given us an opportunity to connect on a more deeper level with clients. How do they want financial services to be delivered? And what are the things that this moment in time has changed in their lens so that we can be creative in how we deliver our work to them? The work hasn't changed and people haven't changed, but we've just all evolved. And so we think it's a pretty exciting time to be in financial services. We think now more than ever, people need advice and counsel to be able to take the emotion out of making decisions, because the emotion is what really, really can hurt people.
Absolutely. Well, thank you again, Al.
Abby, thanks. Have a great day.
That was Albert Fox, the managing director at Fox, Penberthy Dehn at Morgan Stanley. If you enjoyed this video, don't forget to like and subscribe to our channel to hear more CEOs and thought leaders share their opinions and advice on today's business climate. Until next time, I'm Abby Maloney, and this is Invest Insights. Thanks for tuning in.